Hey everybody, Courtney Smith here with our February 13th edition of Wall Street Winners. Now we're in our 28th year of profits. Do you know how much money you make when you compound money for 28 years? It's astounding, astounding. All right, let's dive right in here. So we're seeing a shift in this market here. So last week I told you we would see a little bit of a retracement in the market. We got another week to go on that retracement. I'll show you why in a second. But notice how the purple predictor is way below the price action. That is a bearish factor. So it shows that the smart money's not really buying this rally at all, which makes me nervous. I don't like to fade the smart money. The Dow, we see here the little green line shows that some buying pressure is declining, selling pressure up a little bit, but the main reason the market is stagnant here is because buying pressure is disappearing. Now, this is a more interesting chart. I told you I thought the NASDAQ would outperform, and it has for weeks, but this week it started to underperform. Look at the purple predictor, which had been not at all bearish. It had been neutral, but not bearish like the S&P was, but all of a sudden, we saw some selling pressure come into the market. The smart money started to take the profits on the big rally they had made in the NASDAQ. So this is not a good situation. Now, I think we got another week to go on this dip. I'll show you why here in a second. Now, here in seasonality, we got our seasonal buy signal. So immediately we're now starting to use bigger size positions, 50 to 100% larger size. Our sell signal right here, this is our old buy signal. The sell signal is going to be way down here. So we're going to stay bullish now, probably all the way through April, which is the end of the normal seasonal period, as you can see down here. Now, here's why, one of the reasons why we looked for that dip in the market. Right here, the seasonal situation is bearish. And it's going to be bearish until the end of February. So it could be another 2 weeks. Now, we started the bearish move a week early, so we'll probably end a week early. But that's still another week to maybe 2 weeks of bearish price action. That'll get everybody all worried again. And of course, climbing the wall of worry is where we are in the cycle of the stock market. But look at the seasonality for the rest of the year. It's fantastic. So, you know, in fact, this is going to be a great year for the stock market. Now, part of the reason is that nobody wants to buy bonds right now. You see, you got to realize, wait a minute, why don't they want to buy bonds? Yields are as high as they've been in years. Well, the reason is because in order to get those high yields, the price of bonds have to go down, which means there's capital losses. Yeah, I'm getting 4% instead of 3%, but I just had a huge decline in the value of my bonds. I better get out and save some money. So they're bailing out of bonds, which are in a bear market, and putting their money into stocks, which is a bull market and has a pretty good yield. Now, here we have our risk indicator. Now, the risk indicator is a unique indicator which tells us how much risk the market wants. Well, when the market wants a lot of risk, that's usually good for the stock market, but it also means that they want riskier type stocks. In other words, they want stocks that are in the NASDAQ more than they want Dow 30 stocks. And so here we see, well, this is one of the key reasons that I showed you why I got more bullish on the NASDAQ than on the S&P and Dow. But notice in the last week, we started to see some deterioration. Because of the seasonal situation, I think that this deterioration or NASDAQ underperformance will last for another week or two. That's it. Then we'll go back to being looking for the NASDAQ to outperform the S&P and the Dow. Over here, global shares are a riskier asset than the S&P 500, so they're also coming under pressure, as you would expect. But I also told you last week that look at this little mini momentum divergence. RSI makes a new high, prices make a new high. And we're looking at closes here. Then the price makes a new high close, but the RSI doesn't. When you see that little mini divergence, you look for a little decline. We got the little decline. Now it's continuing. Yield curve, not really a factor in the market at this point. It's already doing its damage of going into a negative yield curve. Look for the recession to come. I think I'm the only person who still thinks there's going to be a recession, but okay. Here's the bear market in bonds. It's going to continue. We're going to go back down to below par. Par is 100. We're going to go back to these lows now over the next few weeks. Look for that, and you can bet on it. Why? Well, you can see right here. We had this huge bull market in gold. That's bearish for bonds. We've had a lurching bull market in yields over here in Germany. That's the blue line. That's bearish for bonds. Commodity prices about stable, which is neutral for bonds. So bond yields going up. Now, if bond yields are going up, that probably means the dollar is going up. And sure enough, the dollar is going up. Look for the dollar. I believe that we're in a major bear market in the dollar, but we're now in a significant bull move inside the giant bear move. Look for this counter trend move to move up to about 107-ish. Look for it to move up into this zone right here, this retracement zone here. Let's call it 106 to 108. And that's going to take probably 3 to 4 weeks. It's not going to be the world's greatest bull market, and I'm not going to play it from the long side. I'm going to use the rally up to here to try to get short the dollar. Well, if the dollar's strong, then that means, yeah, gold is weak, and gold is really weak. Once again, we saw the same little mini momentum divergence here. High close on the price, high close on RSI. Higher close on the price, but RSI did not make a higher close. That's a mini momentum or RSI divergence, and whammarama, the price retraced as it always, maybe not always, but 95% of the time, that's what happens. Okay, so look for gold to continue to move lower. Fully paid up members, I'm going to give you more evidence of that when we get to the fully paid up section. Gold key indicators. Here you can see bear market. Is this neutral or is this bearish? Neutral or bearish? I ranked 2 neutral, 1 bearish, but I could have easily have done 1 neutral, 2 bearish. So gold down. But I think later in the year, it'll perk up and we'll get back into the bull market, but not yet, not yet. Now, I have a major change in my attitude towards crude oil. Now that China has opened, it looks like we're going to see about a 4 million barrel a day increase in demand. At the same time, we're probably going to see a 1 to 3 million barrel decline in supply. That is a huge and major shift in the supply-demand balance and is going to push oil prices back up above 100. You heard it here first. Look for this rally to continue back up off the top of this chart, okay? And notice that I didn't really pay attention to it, but now I am. Notice that the purple predictor is, hang on, we'll get back there. Notice that the purple predictor is very bullish. It was neutral over here, but now it's above the price action, which is bullish. It shows that the smart money is buying much, much more than the average investor, like I was for the last month, but now I'm joining the smart money and turning to the bull side. Bitcoin, I believe, is being manipulated. Here, down here, a giant accumulation zone. Up here, it's time for distribution. The whales pumped this market up, and now they're distributing their profits, making massive profits on their leveraged plays. Now, I can't prove what I just said, but having been in a market participant for 50 years, I've seen pump and dumps come and go. I think this is a pump and dump. All right, freebies, love having you here. You know what to do.
Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com, and the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table. update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody, we'll see you later.